One of the things we're saying is we have not seen this many general purpose technology platforms, innovation platforms, evolve since that period of time. And you're right, the three major ones back then, telephone, electricity, internal combustion engine / automobiles. Those were three platforms. Today we have five, and 14 different technologies are involved in them. So there are subsets of technologies. And so what we believe we're moving into is a period of super exponential growth.
The world stands at the precipice of a significant technological revolution, one that the IMF suggests could ignite productivity, spur global growth, and elevate incomes worldwide. This eagerly anticipated transformation isn't just looming, it's already underway at a breathtaking pace, making it challenging to keep pace with developments. Fortunately, prominent hedge fund manager Cathie Wood claims to have deciphered the formula for investors to strategically position themselves for the abundant opportunities on the horizon. Based on research conducted by Cathie's asset management firm, ARK Invest, 5 innovation platforms are converging to forge unprecedented growth trajectories. These platforms encompass artificial intelligence, blockchain technology, robotics, genomic sequencing, and energy storage. Cathie holds a bullish outlook on these disruptive innovation platforms, forecasting a potential annual growth rate of 40% during this business cycle. ARK's projections indicate that the market value of these platforms could surge from $13 trillion in 2024 to surpass $200 trillion by 2030, presenting vast opportunities, particularly for early investors. Cathie's optimism is particularly pronounced regarding artificial intelligence and blockchain, anticipating how their convergence will revolutionize human activities across production, lifestyle, work, investment, and preparation for future generations. This bullish sentiment extends to crypto assets like Bitcoin and Ethereum, with Cathie envisioning a bull case scenario of $1.5 million for Bitcoin and nearly $200,000 for Ethereum by 2030. In a recent interview with Thinking Crypto, Cathie discussed our 21 shares Bitcoin ETF and emphasized the distinctions between her firm's investor offerings and those of competitors. She also elaborated on the impending technological and industrial revolution, offering insights on how investors can strategically position themselves for significant gains.
Please take a moment to like this video, subscribe to the channel, and don't forget to drop your comment and observations in the comment section below. Thanks and enjoy the video.
Well, we feel great. There have been some surprises. We are definitely punching above our weight. I think that's clear. I think we're number 3, if we're excluding GBTC, which is ceding market share because of the fee difference, primarily, then we are number 3 in volume. And volume is a good leading indicator for flows. It means we have one of the top 3 liquid ETFs. So it's BlackRock, Fidelity, and then ARK in terms of volume. So we're thrilled about that. We're not, I think we're number 4 in assets because I know there are a few institutional flows into other funds, but whereas ours are all really retail funds. Well, one thing I'll start out by saying is we've been researching Bitcoin since 2014. Actually, before that, I started in 2011 at another firm. But since we founded ARK, 2014, we wrote our first blog in 2014. Wow. We did, so ARK knows Bitcoin. We did our first white paper with Art Laffer in 2015. We were the first public asset manager to gain exposure to Bitcoin when it was only $250 in September of 2015. Wow. We did the white paper called Bitcoin, ringing the bell for a new asset class in collaboration with Coinbase. So I don't think anyone beats us when it comes to research, knowledge, and understanding of Bitcoin. That's very comforting for advisors and individuals. There are 2 other things that we think are very important and will be especially so for the wirehouses, the Morgan Stanleys, the Bank of America, Merrill Lynch's, the UBS's, the Wells Fargo. And that is, we have partnered with 21 shares, which over the last 5 years has evolved the infrastructure and operations through booms and busts, through forks and airdrops and halvings. And they have battle tested this infrastructure. I don't think anyone else can say that. And then the third variable is, and again, especially for advisors at these wirehouses, they do not have, a deep understanding of Bitcoin, understandably. We are going to be there to support them. We have a sales team that had to start talking about Bitcoin. And I remember a few of them telling us recently, we didn't even know what Bitcoin was when we were interviewing for the job. And then guess what? They got the job. So they had to learn what Bitcoin was, develop conviction, and hold hands through volatility. And then, of course, the last is we're treating this, and we do believe that Bitcoin is a public good. It is the financial superhighway of the internet, and we have priced it accordingly. We want to make sure that everyone has access because we think it is a very big idea.
Despite the significant outflows from GBTC contributing to a sharp correction yesterday, Bitcoin prices appear to be stabilizing, with the value per coin now surpassing $40,000. Currently priced at $42,250, Bitcoin has rebounded from Tuesday's low of $38,500, marking a 4.68% increase in the last 24 hours as of press time. While some volatility is anticipated in the coming days, analysts are confident that the market will soon settle as more investors join the fray. Notably, certain prominent analysts suggest that the influx of funds into recently approved spot Bitcoin ETFs remains relatively subdued compared to what is anticipated in the near future. These analysts anticipate positive outcomes from ongoing closed-door meetings and discussions, which are expected to yield fruitful results in the coming weeks. In an interview with Tony Edward, Cathie also delves into the forthcoming industrial revolution and underscores the pivotal role that crypto assets like Bitcoin will play. She draws parallels between the impending technological revolution and the industrial revolution of the late 19th century, emphasizing that the forthcoming gains will be even more substantial for all stakeholders. Here are further excerpts from the interview.
One of the things we're saying is we have not seen this many general purpose technology platforms, innovation platforms, evolve since that period of time. And you're right, the three major ones back then, telephone, electricity, internal combustion engine / automobiles. Those were three platforms. Today we have 5, and 14 different technologies are involved in them. So there are subsets of technologies. And so what we believe we're moving into is a period of super exponential growth. So if you look at the period from the early 1900s to today, the average growth rate of the global economy, real GDP, including China, has been 3% on average. Now, if you go back and you look at past periods of technological breakthroughs, the steam engine and so forth, each time growth rates in the global economy jumped. I think we got from 0.6% to 3%. That was the jump to get us to that 3% for the last 100 and some odd years. If we're right, these 5 platforms will create a boom in productivity, a magnificent wealth generation opportunities, and could take GDP growth up to 6, 7, 8%. Nobody believes that now. They think we're crazy when we say it, but we are putting the building blocks together, of these platforms now that they are moving into prime time, each one having their own S-curve. So AI and Bitcoin, we did a Bitcoin brainstorm. It was our second Bitcoin brainstorm with, I don't know if you know Rod at Bitcoin Park in Nashville, Tennessee. And it was the convergence of Bitcoin and artificial intelligence. Because of convergences like that, we think that these S curves are feeding each other and will get us to those growth rates. The history of technology is it's a net job creator over time. You just don't know what the jobs are going to be. For example, in the early 90s, the early days of the internet, did we have any idea that Uber and Airbnb would exist? It wasn't even possible to comprehend it, but they could not exist without the internet, right? So I think the kinds of jobs we're going to be seeing are very interesting. Already in AI, we're seeing a new category of engineers. They're called prompt engineers. Just now that we're not going to need as much coding and development, AI will do that for us. We just need to become linguistically very precise. And so I think linguistics is going to become more important as a job as well. So different kinds of jobs. In the short term, sure, you're going to see some displacement. I mean, we think most food deliveries will be done by drones and other robots, right? Ultimately. So those delivery jobs might disappear. That is why it's so important. And it's one of our missions and values to educate people. So instead of universal basic income, what I would encourage is that read up, educate yourselves, figure out if you're in harm's way, if your kind of job is going to be displaced.
Sure.
And then figure out which of these major platforms you want to get involved with.
Elsewhere in the crypto sphere, cryptocurrency trading platform Crypto.com has unveiled its annual crypto market sizing report, unveiling a notable surge in the global count of crypto owners despite prevailing macroeconomic challenges. According to the report, the number of global cryptocurrency owners surged by 34% in 2023, climbing from 432 million in January to 580 million by December. Bitcoin owners increased by 33% from 222 million in January to 296 million in December, while Ethereum owners saw a 39% rise from 89 million to 124 million during the same period. The report highlights that Bitcoin owners comprise 51% of global crypto owners, while Ethereum owners constitute 21%. Furthermore, the report delves into the factors driving Bitcoin and Ethereum adoption growth in 2023. It attributes Bitcoin's adoption surge to developments in Bitcoin exchange-traded funds and the introduction of the Bitcoin Oracle protocol, enabling the minting of non-fungible tokens and fungible tokens on the Bitcoin network. Strong interest from institutional investors also played a significant role. For Ethereum, the report credits the liquid staking initiative post-Ethereum's Shanghai upgrade, facilitating the withdrawal of staked Ethereum following the transition to a proof-of-stake blockchain. Despite facing macroeconomic headwinds in 2023, the crypto industry witnessed a remarkable influx of 148 million new users. Looking ahead to 2024, the question arises, will we reach the milestone of 1 billion users? We invite you to share your thoughts on this matter and provide your insights on Cathie's interview in the comments section below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.